Hey guys, Boris EURJPY Forex. Welcome to the crosses section for Jan 21, Jan 25, 2019. This week I want to try something different. We talked about the idea that the euro dollar looks very, very negative on the majors chart. And looks like it's really almost ready to crack that 1350 support level. But there is an interesting divergence between the euro on the majors and the euro on the crosses. And I kind of wanted to focus on that this week because I think maybe we have a divergence signal here that could possibly be tradable. When you look at the euro across all the major crosses, euro pound, euro Aussie, euro yen, it actually looks relatively positive. So while it's washing itself out against the majors, it may be showing us that it's kind of nearing this bottoming out process. And there are a couple of trades specifically here on the crosses that look quite interesting to me. So euro pound, 87.50 support, 89 is the resistance. Euro Aussie, 57.50 support, 59 resistance, and euro yen, which also looks very good here, 23.50 support, 25.50 is the resistance. Let's take a look at them one by one. Let's start with euro yen, which looks actually kind of the best of all. Now 25 is clearly the big resist point here. So if we fail here, a lot of this whole thesis of euro bottoming out goes right out the window. But if we can clear the 25s, this opens up the full run all the way out to around 26 at this point, and really completes this big recovery in risk, which really started the day before the fat finger trade, and would really be a very powerful move. So you would not only would you be able to, if you close above 25, cover the 20 SMA, but if you could take out or approach the highs over here, very bullish construct. The fact that we're kind of bottoming out, the structure here with higher lows, all of it looks pretty good on the euro yen basis, and it could be that kind of divergence signal that is telling us that maybe euro is not nearly as big a sell as everybody thinks it is. The other trade that I really like on the crosses, as far as the euro crosses goes, is the euro pound, because here we have a very clear, very defined bottom here. So after 5 or 6 days of hardcore selling, big reversal candle today, it would have been really, really positive if we could take out the highs of this candle. But even within this particular structure, the risk is very limited. You're only looking down to the 87.50, 87.75 is the lows of the pair, 87.50 just to give yourself a little bit of a cushion for a spike low. But generally, this kind of a turn of trend tends to have a little bit of continuation in euro yen crosses, because as you can see, it's sort of the pair kind of moves in waves, right? So you have these big waves, and this wasn't the here's a big wave where you had a big turn of trend, and then you had a secondary downward wave turned around, upward wave, a downward trend that then continues sort of sloppily, but then all the way to the downside. So perhaps we are at a point here where at very minimum we're kind of bottoming out, and we could be turning an upward trend. This is in some ways, of course, a function of the idea that actually a positive development on the Brexit front would be, at this point, even more beneficial towards the euro than it is towards the pound. And you could have an adjustment in the two pairs as we go forward. Or even just, I guess, basic repositioning flows would actually kind of help us for a little bit further to the upside. Regardless, just on a purely technical basis here, the fact that you got a clearly defined bottom, a nice tradable turn of the flow, gives me pretty good confidence that maybe euro is actually not nearly as big a sell as it appears to be on the majors. And lastly, this is